To keep yourself updated, subscribe to Indigo Learn and click the bell icon and download our app OneFin to start learning on the go.
Section 14, which deals with the concept of time of supply in case of change in rate of tax. Now, what is that we are trying to talk? I'm discussing about the concept of how do we determine time of supply whenever there is a change in rate of tax. We know that there are three important dates. That is number 1, date of invoice, number 2, date of payment, number 3, date of supply. It may be date of supply of goods or a date of supply of service. Now between these three dates, there could be a change in rate of tax. Now when I say change in rate of tax, the rate might go up or the rate might come down. Anything is possible. Let's take a scenario and example, my dear friends, something like this. Let's say there is one person known as Dhoni, one person known as Kohli. Okay, now let's say Mr. Dhoni is a chartered accountant providing chartered accountancy services to Mr. Kohli, and the rate of GST in general for chartered accountancy services is 18%, my dear friends. But there is a possibility that between the invoice date, payment date, service date, there could be a change in rate of tax. That 18% might become 28% or 18% might become 12%. So directly or indirectly, I'm trying to tell you that the rate of GST between these three dates got changed, which could be increased or it could be decreased. Now, whenever there is a change in rate of GST like that, how do we determine time of supply? And that concept is given by section 14. And let me tell you, this provision is applicable with respect to services, but not with respect to goods. Why? Because let me tell you one point very clearly. If you remember in section 12.2, the general rule related to time of supply in case of goods, I clearly told you that once upon a time, time of supply concept was date of invoice or date of payment, whichever is earlier. But by virtue of power given by section 148, they have notified new provision by way of notification number 66 by 2017 dated 15th November 2017, where they have clearly specified that in case of goods, directly time of supply will be date of invoice. That means date of payment cannot become time of supply. That is why we discuss very clearly that in case of goods, we do not pay GST on advances. Our liability to pay GST arises only at the time of invoice. And date of invoice clearly means actual date of invoice or last date when invoice is ought to have been issued, whichever is earlier. And when invoice is ought to have been issued, that also we discussed that in case where there is movement of goods on or before date of removal and no movement of goods on or before date of delivery. And for continuous supply of goods when statement is issued or as the case may be, payment is received. And for goods sent on approval basis, invoice is supposed to be issued at the time when recipient approves or 6 months from the date of removal, whichever is earlier. All these interesting points we discussed with respect to general rule in case of time of supply for goods. And the foremost point we discussed there was GST liability will not arise on advances. That is, the GST liability will arise only at the time of invoice. That is why we straight away say that this provision of section 14 will not apply to goods, but it will apply only to services. Now listen, before I explain you section 14, let me first explain you few top line items in section 14. Then we will go into detailed points as to how do we determine time of supply in case of change in rate of tax. Listen, as I told you, my dear friends, we have got three important dates. 1, date of invoice. That is nothing but the actual date when invoice is given. Number 2, date of service. That is nothing but the actual date when service is generally completed. Then last point, that is nothing but date of payment. And we have discussed already and we have learned the concept already that date of payment means date when payment is entered in the books of accounts or date when payment is credited in bank account, whichever is earlier. Why this concept is coming? Because there could be a scenario where a recipient has given one check to the supplier and supplier entered that check in the books of account. But after a point of time, supplier will deposit the check in the bank account and finally check will get cleared. So entry date in the books is different and the date when payment is created in the bank, that is different. This is highly possible. Now let's take an example with numbers. Listen here very clearly. So let's take an example like this, that Dhoni is a chartered accountant supplying service to Mr. Kohli, and for service value is, let's say, 1 lakh rupees. Now for that 1 lakh rupees, Kohli has given one check to Mr. Dhoni, and the check is given on, let's say, 6th October. So when did Kohli give the check to Dhoni, my dear friends? Kohli has given a check to Dhoni on 6th of October. 6th of October is the date when Kohli has given the check to Mr. Dhoni. And what Dhoni has done is, Dhoni has recorded that receipt of check in his books of accounts. So payment is technically entered in the books of accounts on 6th October. And next date, my dear friends, on 7th October, Dhoni has deposited that check in the bank account, and check got cleared on 8th October. That means payment got credited to the bank account of Dhoni on 8th October. And as I just discussed with you, my dear friends, date of payment means what? Date of payment is nothing but the date when payment is entered in the books of accounts, or the date when payment is credited in the bank account, whichever is earlier. And in this particular example, what I just gave you, payment is entered in the books of accounts on 6th October and the payment is credited to the bank account on 8th October. In this case, we will consider the date of payment as 6th October only. Logic is very simple. What we will consider is the date when payment is entered in the books, or the date when payment is credited in the bank, whichever is earlier. But here, one very special point to be noted. What they are given in the law is that we accept that in general, date of payment means the date when payment is entered in the books, or date when payment is credited in the bank, whichever is earlier. But one special point is there in section 14, where they have clearly given that in section 14 also, date of payment means the date when payment is entered in the books, date when payment is credited in the bank, whichever is earlier. But the special point what they have given is that if the credit in bank account, I repeat, if the credit in bank account is after 4 working days from the date of change in rate of tax, then they have given that kindly please consider the date of payment as the date when payment is credited in the bank account. What does that mean? Let's take a small example and understand this in a better way. Yeah, listen. Sir, our supplier of service is Dhoni, recipient of service is Kohli. Let's say for that service, the rate of GST is 18%, and Kohli has given a check to Dhoni on 28th of September. When is the check given? The check is given on 28th of September. And after that, what has happened is that with effect from 1st October, the GST rate of 18% became 12%. That means there is a change in rate of tax. And after that, what has happened is, my dear friends, Mr. Dhoni deposited the check in the bank account on 5th October and the check got cleared on 6th October. So if you observe very clearly, Dhoni received the check on 28th September and he deposited the check on 5th October and check got cleared on 6th October. Correct, my dear friends? So if you observe very clearly, when is the payment entered in the books? The payment is entered in the books on 28th September and the payment is credited in the bank on 6th October. And generally, the answer for date of payment is date when payment is entered in the books or date when payment is credited in the bank, whichever is earlier. So strictly speaking, answer should be 28th September. But let me tell you, answer is not 28th September. The answer is 6th October. But why? Let me tell the answer for that. Where law clearly specified that if the credit in bank account, if what, my dear friends, credit in bank account is after 4 working days, is after what? 4 working days from the date of change in rate of tax. If the credit in bank account is after 4 working days from the date of change in rate of tax, then we will consider the date of payment as date of credit in bank account. So what we will consider is 6th October because it is after 4 working days from the date of change in rate of tax. Getting clarity, friends? So the concept is very clear. That is straight point, my dear friends. I mean, if you want, instead of 6th October, you can take example as 7th October because 2nd October is generally Gandhi Jayanti on which we get a holiday. You can take it as 7th October. But the point is very simple. The credit in bank account should be after 4 working days from the date of change in rate of tax. So friends, I'll repeat one last time the concept what I just discussed. That is, date of payment generally means the date when payment is entered in the books or the date when payment is credited in the bank, whichever is earlier. But the special point given in section 14 is that if the credit in bank account is after 4 working days from the date of change in rate of tax, then we will consider the date of payment as the date of credit in bank account. This is a special point what you need to keep in mind. So now let's look at the provision to understand how do we determine time of supply in case of change in rate of tax. And as I told you, there are 3 relevant dates. 1, date of invoice. 2nd, date of payment. 3rd, date of service. Now taking these 3 dates into account, we are going to determine the time of supply in case of change in rate of tax. Now, how do we determine this? Just consider properly and you will get your complete answer. Listen, service is before change in rate. Invoice also is given before change in rate, but payment is made after change in rate. Come on, what did I say? Service is done before change in rate. Invoice also is done before change in rate, but payment is received after change in rate. In this case, my dear friends, time of supply will be date of invoice, because what they have specified is that what goes with service, that becomes time of supply. I repeat one more time, listen very clearly. Service is before, invoice is before, payment is after. Then time of supply will be date of invoice. Second point, service is before, payment is before, invoice is after. Then time of supply is date of payment. What goes with service, that becomes the time of supply. Next possible situation, service is before, invoice is after, payment also after. When I say before, after, I am talking about before change in rate of tax, after change in rate of tax. Come on, listen. Service is before, invoice is after, payment also after. Both are after. In that case, my dear friends, time of supply will be date of invoice or date of payment, whichever is earlier. Come on, friends. So what is the first point I told you? Service is before, invoice is before, payment is after. Then time of supply will be date of invoice. Service before, payment before, invoice is after, time of supply will be date of payment. Next possibility, service before, invoice, payment, both are after. In that case, time of supply will be date of invoice or date of payment, whichever is earlier. Next situation, imagine service is before, invoice is before, payment also before. That means all the 3 are before change in rate of tax. In that case, my dear friends, section 14 will not apply, because section 14 will apply only and only when if between these 3 dates there is no change in rate of tax, then section 14 will not apply. Please understand that section 14 will come into picture only when there is a change in rate of tax between these 3 dates. Come on, listen next. Service is before, invoice is before, payment is after. What is the answer? Date of invoice will become time of supply. Service before, payment before, invoice is after. Time of supply is date of payment. Then service is before, invoice is after, payment also after. Then time of supply is date of invoice or date of payment, whichever is earlier. Next situation, service is before, invoice is before, payment also before. Then section 14 will not apply. Next possible situation, service is after, invoice also after, but payment is before. Then time of supply will be date of invoice. I told you the logic. What goes with service, that becomes time of supply. Service is after, invoice is after, payment is before. Then the answer is date of invoice. Then service is after, payment is after, invoice is before. Then the time of supply will be date of payment. Next situation, service is after, invoice is before, payment also before. Then time of supply will be date of invoice or date of payment, whichever is earlier. Last case, service is after, invoice also after, payment also after. That means all the 3 are after change in rate of tax. In that case, my dear friends, section 14 will not apply, because section 14 will apply only when there is a change in rate of tax between these 3 dates of service, invoice and payment. If between these 3 dates there is a change in rate of tax, only then section 14 will apply. Let's take an example to understand this concept better. Listen, sir, let's say there is a change in rate of tax on 15th October. When there is a change in rate of tax, 15th October. And let's say service is done on 13th October. That means what? Before change in rate. Payment is also received on 14th October. That means before change in rate. But invoice is on 17th October. That is after change in rate. So service is before, payment is before, but invoice is after. In that case, time of supply will become date of payment, which is nothing but 14th October. But imagine a case where service is on 13th October, 15th October there is a change in rate, invoice is on 17th October, payment is on 18th October. That means what? Service is before change in rate, but invoice and payment both are after change in rate. In that case, my dear friends, time of supply will be date of invoice or date of payment, whichever is earlier, 17th October or 18th October, whichever is earlier. So answer becomes 17th October. Imagine a case where service is before 15th October, invoice also before 15th October, payment also before 15th October. That means all the three are before change in rate. In that case, section 14 will not apply. Clear, guys? Next situation, let's say service is on 13th October, invoice is on 14th October, change in rate when? 15th. And let's say payment is on 17th October. That means what? Service is before, invoice is before, payment is after. In that case, time of supply will become date of invoice. That is nothing but 14th October. So what goes with service, whether it is before or after, that becomes time of supply. And if nothing goes with service, that means service is before, invoice payment both are after. Or other possibility, service is after, invoice payment both are before. In that case, time of supply will be date of invoice or a date of payment, whichever is earlier. And one special point to be kept in mind is that if invoice, payment, service, all the three are before change in rate or all the three are after change in rate, then section 14 will not apply, because section 14 will apply only to those cases where there is a change in rate of tax between these three dates of service, invoice and payment.